Welcome to Deep Kiran Classes of Commerce and Expert Coaching with Guaranteed Success. Please subscribe to my channel and hit the bell icon for the latest update.
Now we are going to start with the fourth practical problem on page number 245 and 46. Okay. Fourth practical problem, Asha, Usha and Nisha were partners sharing profits and losses in the ratio of 2:2:1. The following is the balance sheet as on 31st March 2019. Balance sheet as on 31st March 2019. Liabilities amount, assets amount. Now capital accounts, Asha 1,20,000, Usha 40,000, Nisha 40,000. Accumulated reserve, general reserve 12,000, creditors 80,000, Asha's loan 16,000, bill payable 28,000. Asset side, machinery 1 lakh, investment 48, debtors, net debtors 1,04,000, stock 40,000, profit and loss account 36,000, bank account 8,000. Now, on the above date, the partners decided to dissolve the firm. Assets were realized as under: machinery 90,000, stock 36,000, investment 42,000 and debtors 90,000. Okay, for this cash has come. Dissolution expenses paid were 6,000. Goodwill of the firm realized 48,000. In the given balance sheet, goodwill is not there, so unrecorded goodwill valued. So this also pass the journal entries to close the books of the firm. Now we are going to look at one by one. Okay. So first journal entry will be what? Regarding transfer of assets to realization. First entry is transfer of assets to realization. So now we are going to prepare the journal entries. Okay. First entry will be regarding transfer of assets to realization account. So what will be the journal entry for that? Realization account debit to machinery account. How much? 1 lakh. At its book value we are going to investment 48,000. To debtors 1,10,000. To stock 40,000. Total up this will come 2,98,000. So realization account debit 2,98,000 being assets transferred. Now likewise liabilities also need to be transferred. So creditors account debit 80,000, bills payable account debit 28,000. Now RDD 6,000 to realization account. Okay. Total of this, it will come to 1,14,000. These are the liabilities transferred. Okay, at its book value. Now there is accumulated profit, that is general reserve, which will be distributed amongst the partner, amounted to rupees 12,000. So general reserve account debit 12,000. To Asha's capital account 4,800. Usha's capital account 4,800. To Nisha's capital account 2,400. How this has come? 2:2:1 is the ratio, and according to that we have distributed. Now on the asset side there is profit and loss account, that indicates loss, accumulated loss. That will also be distributed in their profit sharing ratio. So Usha's capital account debit 14,400. Asha's capital account debit 14,400. Usha's capital account debit 14,400. Nisha's capital account debit 7,200. To profit and loss account 36,000. What we have done? We have transferred assets, then liabilities, then accumulated profits, and then accumulated losses. Okay. Now one by one we are going to look into assets realized. See, bank account debit to realization account 2,58,000 being machinery, investment, debtors and stock realized. Okay, at the agreed value, that is 2,58,000. If you total up the agreed value, it will come to 2,58,000. Then there is unrecorded goodwill and that realized to rupees 48,000. So we have received cash on account of unrecorded goodwill. Bank account debit 48,000 to realization account 48,000, being unrecorded goodwill realized. Then number 7, liabilities are to be paid off. So realization account debit to bank account. Now see, what are the liabilities that is to be paid off? So that totals to 1,08,000. Okay, 80 plus 28,000. Then there is dissolution expenses and Asha's loan of rupees 16,000. So that both we have paid. So realization account debit, if you total up dissolution 6,000 plus Asha's loan 16,000, that will be total to 22,000. So realization account debit 22,000 to bank account 22,000. Being dissolution expenses and Asha's loan paid. Now we have done all the assets, transferred all the assets, liabilities, then realized, paid off the loan. Now we will see whether the debit side of realization is more or the credit side is more. Okay. Whether the debit side is more or the credit side is more. Here the debit side is more. Sorry, here the credit side is more. So here the credit side is more. Profit is being transferred. Okay. So by 8,000 there is profit on realization of rupees 8,000. So realization account debit to Asha's capital account, to Usha's capital account and to Nisha's capital account 1,600. There is profit on realization. Credit side is more than the debit side. Okay. Credit side is more than the debit side. That is why there is profit on realization. And now the remaining balances after having accumulated profits, accumulated losses, then revaluation profits, adjusted balances are Asha's capital account 1,13,600, then Usha's capital account 33,600, Nisha's capital account 36,800, to bank account, being capital paid and firm is dissolved. Okay, here what we have done, we have closed the capital accounts, the balances remaining will be paid to them and the firm is dissolved. Here I have completed the fourth sum.